IBM just suffered a major setback as AI reshaped where enterprise customers spend their technology budgets. In Q2, IBM's revenue grew only 1%, infrastructure fell 7%, and mainframe revenue plunged 42%. Management said customers were redirecting spending toward AI infrastructure, forcing IBM to cut its 2026 revenue growth outlook to 4 to 5%. Yet just weeks later, IBM announced a strategic partnership with OpenAI, embedding GPT-5.6, Codex and ChatGPT work into IBM Consulting Advantage. So why would IBM partner with one of the technologies reshaping its business? The answer may reveal where IBM believes the real economic value of AI will ultimately sit. IBM's latest quarter revealed a problem deeper than a weak earnings print. Revenue grew only 1% year-over-year, while infrastructure fell 7% and IBM's revenue plunged 42%. But management said the pressure was partly caused by customers shifting capital spending toward servers, storage, and memory to secure AI infrastructure supply. IBM had anticipated some impact, but not the magnitude of that reprioritization. That distinction matters. AI is not simply creating new technology spending, it is changing where existing enterprise budgets are going. And when customers prioritize AI infrastructure, traditional IBM purchases can be delayed. That is why IBM's weakness may be less about disappearing demand, and more about losing the spending priority battle. The key problem for IBM is not that enterprise technology spending disappeared, it is that the spending mix changed. IBM said customers accelerated purchases of servers, storage, and memory to secure AI infrastructure, while several large IBM deals were delayed. Management later said many of those delayed deals began closing in Q3, suggesting that at least part of the weakness was timing rather than permanent demand destruction. That distinction is critical. The AI boom is creating enormous demand for infrastructure, but customers have finite budgets, and some of that spending is being pulled forward into AI hardware. IBM therefore faces a transition problem. The same AI cycle creating massive technology demand is also changing which parts of IBM's portfolio receive priority. And that is where the story becomes much more interesting. Wall Street's reaction was far more severe than a normal earnings miss. When IBM warned on July 14 that customers had shifted spending toward AI-related servers, storage, and memory, its shares plunged 25% in a single session, the company's worst one-day decline in the available historical record. The market was not simply reacting to weaker infrastructure revenue. Investors were questioning whether IBM had misread the direction of enterprise technology spending, and whether its traditional software and consulting businesses could remain relevant as AI absorbed more corporate capital. IBM's own CEO acknowledged that the company had faltered in keeping pace with that spending shift. But this is where the story becomes more interesting. If AI is disrupting IBM's old model, can IBM position itself to capture the new one? The contradiction inside IBM is becoming clearer. While AI-driven spending shifts hurt parts of its traditional business, AI is already becoming a meaningful growth contributor inside IBM itself. In Q1 2026, IBM said its AI platform, agents, assistants, and orchestration business had surpassed $1.5 billion in annualized revenue, was already about 25% penetrated across its software business, and was growing at more than 40%. Management said this business was contributing roughly 2 percentage points of annualized growth. That changes the interpretation of IBM's AI problem. The company is not standing outside the AI boom watching others win. It is already monetizing it. The challenge is whether this emerging AI growth can become large enough to offset the spending disruption affecting legacy businesses, and that is where IBM's consulting strategy becomes critical. IBM's strategic opportunity may not be to compete with OpenAI, Google, or other frontier model developers. Instead, IBM can monetize the layer where AI becomes useful to large enterprises: deployment, integration, workflow redesign, application modernization, and security. IBM's Consulting Advantage is already designed as an open ecosystem that integrates IBM technology with leading technologies from strategic partners and supports the full journey from advisory to build, integration and operations. The OpenAI partnership now takes that strategy further by embedding GPT-5.6, Codex and ChatGPT work directly into Consulting Advantage, while IBM creates a dedicated OpenAI practice and trains tens of thousands of consultants. The implication is important. IBM does not need to own the winning model if it can become the enterprise layer that puts the winning models to work. Then IBM made a move that suddenly made its strategy much clearer. On August 13, IBM announced a strategic partnership with OpenAI to integrate OpenAI's frontier models, including GPT-5.6, along with Codex and ChatGPT work into IBM Consulting Advantage, its AI-powered delivery platform. The goal is not simply to give consultants another AI tool. IBM says the technology will help clients redesign core workflows, modernize applications, develop software, and strengthen cybersecurity. IBM is also creating a dedicated OpenAI practice and plans to train and certify thousands of consultants and engineers through the OpenAI Partner Network. That is significant because it connects frontier AI directly to IBM's enterprise distribution and consulting capabilities. OpenAI brings the models, IBM brings the people, workflows, and enterprise relationships needed to put those models into production. And that may be the real strategy behind this partnership. OpenAI is important, but it is not IBM's only AI bet. In June, IBM expanded Consulting Advantage with Google Cloud's Gemini Enterprise Agent platform and created a global Google Cloud practice with thousands of consultants. IBM described the opportunity as potentially worth billions of dollars in Google Cloud services. This reveals a broader strategy. IBM is not trying to predict which AI model will win. Instead, it is building an enterprise layer where different AI technologies can be integrated, deployed, and managed inside real business workflows. That matters because IBM can potentially monetize AI demand without owning the underlying model. OpenAI may provide frontier intelligence, Google another model, and IBM the enterprise execution layer. The hardest part of enterprise AI may not be building the model. It is putting that model safely into complex business systems. IBM already has the enterprise relationships, consulting expertise, and technology infrastructure needed for that transition. Its Consulting Advantage equips nearly 150,000 consultants with industry and role-specific AI assistants, agents, and applications, covering the journey from advisory to build, integration, and operations. The OpenAI partnership extends that capability by bringing frontier models directly into IBM's consulting workflow, including application modernization, workflow transformation, and cybersecurity. This creates a potentially valuable position. AI labs build intelligence, but IBM understands the enterprise environment where that intelligence has to work. As AI moves from experimentation into production, that context could become an increasingly important source of value. The potential growth opportunity is not the OpenAI partnership by itself. It is what happens after an enterprise decides to deploy AI. IBM can participate across consulting, workflow redesign, application modernization, hybrid cloud, software, and cybersecurity. IBM says roughly 80% of its AI bookings come through consulting, while its 160,000 consultants provide the distribution needed to take AI into enterprise operations. IBM's own strategy is built around helping clients move AI from experimentation into production, while its enterprise advantage can work across AWS, Google Cloud, Microsoft Azure, IBM Watsonx, and both open and closed-source models. That creates a potentially powerful flywheel. More AI adoption can generate more consulting work, which can lead to more modernization, cloud and software demand. The question now is whether IBM can convert that ecosystem into measurable revenue growth. The strategy is becoming clearer, but the financial evidence is still incomplete. IBM's Q2 revenue grew only 1%, consulting was essentially flat, and the company lowered its 2026 constant currency revenue growth outlook to 4 to 5%. Management still expects free cash flow to increase by about $1 billion for the year, showing that profitability remains resilient, but revenue acceleration has not yet appeared. More importantly, IBM and OpenAI have not disclosed the financial terms or incremental revenue expected from their new partnership. So the market has a strategic story, but not yet an earnings story. The partnership can strengthen IBM's position in enterprise AI, but investors still need proof that this position can translate into sustainable revenue growth. And that makes the next earnings reports far more important than the partnership announcement itself. IBM has built the strategic pieces, AI software is growing, consulting is increasingly AI-driven, and OpenAI now adds frontier models to IBM's enterprise platform. But the next proof point must come from the numbers. In Q2, consulting revenue was only $5.3 billion and essentially flat, while IBM cut its 2026 revenue growth outlook to 4 to 5%. Management previously said generative AI already represented about 30% of consulting backlog, showing strong demand, but backlog still has to convert into revenue. So investors should watch consulting growth, AI signings, backlog conversion, software growth, and margins. The OpenAI deal strengthens the story, but earnings will determine whether the strategy is working. The next question is therefore not who IBM partners with, but whether AI can finally move IBM's growth rate higher. IBM's strategy is now easier to see. It does not need to win the foundation model race. Instead, it can use models from OpenAI, Google, and others to help enterprises deploy AI across consulting, software, modernization, and cybersecurity. Management remains confident in IBM's portfolio, but the numbers show the challenge. Q2 revenue grew only 1%, consulting was flat, and full-year growth guidance fell to 4 to 5%. The OpenAI partnership strengthens IBM's strategic position, but it does not yet prove incremental earnings. That proof must come through stronger consulting growth, AI backlog conversion, and sustained software momentum. So the real IBM AI story is not whether the company has found a strategy. It has. The question is whether IBM can turn that strategy into durable, measurable growth. As always, this video is not financial advice. Please do your own research before making any investment decisions. Thank you for watching. If you found this analysis helpful, don't forget to like, subscribe, and I'll see you in the next equity research.